In this video, I want to talk about the action-reaction cycles, the short-term cycles versus the long-term cycles, and how the two can be connected and used together. Because it depends on what type of trader you are, whether you want to make short-term projections or if you want to be a long-term trader. This helps you stay in the market until the duration of the longer-term trend. I'm looking at the British pound continuous chart of the Globex British pound. I'd used this in a previous video, but it had a very good cycle that I could use to illustrate what I'm talking about. First of all, let's just go back and revisit some what I'd done in the past. I'd shown you how I'd use this action segment right here to project the reaction segment right here. In other words, this part of the market did not exist when we made a projection of 31 days. We knew this market would head lower and it would head down for 31 days. So let me just go back and we'll just revisit how we made that time projection and also the price projections. Okay, if you've read the book Unlocking Wealth, Secret to Market Timing, you know that what I call a reaction swing. A reaction swing is the part that trades against the trend. So the trend was down, this market goes against the trend. That identifies the balancing point, the center point, the exact part where the action ends and the reaction begins. First thing we do is we identify the beginning of the reaction swing and the end of the reaction swing. And then I do my reverse count. I do the reverse count because I want to look into the past, see how far the action part of the cycle has already occurred. And in this, you go back and I'm counting the bars. I count back, this low is the 11th bar. I count back to this low, that's the 21st bar. Count back to this low, that's the 27th bar. And the major high is the 31st bar. So from here to here, that's 31 bars. So action segment of the cycle was 31 bars, which means we are looking for the market to trade 31 bars into the future if it's going to fulfill the reaction segment of this cycle. And as you can see, as you're counting down, we start to this high bar and we count back. The 11th bar was a little bit of a high. The 21st bar was another turning point. The 27th bar we broke out, have a little consolidation. So these past actions, I should say, did affect the future reaction part. But the most significant was the major low occurred on the 31st bar, just as projected. And then just for fun on this chart, I continued to count out to the previous high, which was 36. As you can see, that also came back and helped us identify a little bit of a low before the market went into a kind of a consolidation pattern. Of course, the next thing we want to do is we want to make price projections. And so, as you know, I use the action reaction bars to do that. And the first thing I start out with is the Andrews pitchfork. And I anchor it up at this major high. And then I use the beginning of the reaction swing and the end of the reaction swing for the other 3 points of the Andrews pitchfork. And so that has identified the angle of the market. And now we look at the price projections. And we do it the exact same way. We just use the past back here, starting from this point back to 31, to project the future, out in the future. The way they do it, first thing I do is I draw a line from the beginning of the reaction swing to the end. So in this case, from the low to the high. Then we just take that line out and we take it down to where the projected reversal date, day number 31, crosses the lower parallel line. And I picked the lower parallel line because the market is trading below the center line. The center line, or the median line, to me is a momentum indicator. If it crosses and closes completely below that, 2 or 3 bars below that, that means the market is extremely weak and should drop down to the lower parallel line. And in this case, the projections, the market came down and it hit the exact low right at the price projections. So once again, using this information, the action segment, we were able to project future price objectives and future time objectives. Now that was a long-term cycle, but now I want to break it down. I want to look at the short-term cycle. I want to look at a couple of things. The first one, let's look at this action segment here and how it could be broken down to make shorter-term projections. Okay, I've blown this part up so we can get a little clearer picture. First of all, I am going to look at the TR pattern sequence. That's the very beginning. The sequence, pattern sequence right here. And let me get this in line here. That's the TR pattern. And in my book, I talk about the TR pattern, how it identifies major turning points in the market, typically appears at major highs or major lows in the market. But also that pattern sequence can be used to make future time and price projections. So in this case, we're going to begin right here. Let me get my pen back up here again here so I can mark it for you. Here's the low and the high of the reaction swing. So I do my reverse count and I count back to this previous high. That's 9 bars. And then from this we count forward. 9 bars puts it right at this level. So that is the first projection that we make. Well, let's go back here and let's put the Andrews pitchfork on here real quick. We'll make a little price projection. I'm going to anchor at this high, mark the low, mark the high. Let me draw my line for my reaction line here. Drop it down to the 9th. And in this case, since the market is trading above the median line, it shows it is having strength and it's moving away. I mark it right here on the center line where the center line crosses the reversal date. And you see how the market drops right down into that date and it hits this line and it goes into a sideways consolidation. In fact, this sideways consolidation, if you look right here, you have 1, 2, 3, it has formed a new reaction swing. And of course that new reaction swing can be used to make the next projection because we just stepped down to that projection. Remember, this seems a little complicated. It is all described in my book. I go into great detail on how to do this in the book. So in this case, we have a new reaction swing, and let me get my pen here so I can mark it for you. This is the low and the high. So that's the reaction swing that we're going to use to make our measurements. And from here I do a reverse count to this low. That's 10 bars. I do a forward count, and what it does, it identifies this price bar right here, the exact low before the market starts a little upward trend. Next thing you know, let's do our price projections and see how that works. Anchor it here. Let's use this low, mark the high. Matter of fact, in this one, we can actually drop this down. See if I can drop that down to this area right here. Get my reaction line. Bring that reaction line down. And look at the price. It went right to the projected price. So time and price came together exactly before the market went up there. So were identified this reaction swing and we were identified this reaction. So you know exactly the time and the price where this market was going to turn around and go into your upward, short-term upward trend. Okay, I brought it out here for a longer term view. I have left those reaction lines on here, that cycle we just looked at. As you can see, I have them on the dotted line so we can still use them as reference. Right here, see? And then see what we did is the market went into what I call the 5-wave continuation pattern. See how the market here, 1, 2, 3, 4, 5. And there's a continuation pattern, and then we broke out of it right in this area and triggered another sell signal. As we know, as I talk about in the book, the 5-wave continuation, I have an ABC, which is a 3-wave, and a 5-wave continuation pattern. This is the type of pattern that occurs in the center of a longer term cycle. It connects two shorter term cycles together. And we can see after that mark is completed, we have another drop. Well, let's just take a look at that one. This market drops down, and the first reaction swing we forms right here. Right here. So that reaction swing, so we can use that to make a backward projection. So when I start the reverse count at this low and I count back to this previous high, it comes up with 16 bars. Then we go here and we do our forward projection. We count forward 16 bars, and it comes up right here. If you remember, that was also the 36th bar. So we have this cycle here and this cycle here coming up with the same projected reversal dates. Okay, I've cleared all that off here so I can show you some price projections now. Let's just do a real quick price projection. We'll draw the Andrews pitchfork right here. For the shorter term, put in the line for my action reaction lines to do the price projections. Bring it right down to where the reversal date, that date crosses the median line, and that gives you your price projection right here. So it's very interesting. I find that very interesting that you have two. You have the longer term cycle from here to here. Let's draw that from here. Coming into that area. And then you can look at the shorter term cycle. Well, hold on here. Let me get my lines up here. Got to get my drawing tools working. Then you have your shorter term cycles coming to the exact same place. So that's an illustration. I know it may be a little bit complicated, but that's an illustration how you can use your action reaction and market behavior to make future projections, whether you want to be a short-term trader or a long-term trader, or even combine them together. Because knowing ahead of time where the market's going, how long it's going to take to get there, is a pretty valuable tool. Okay, I want to thank you for taking a moment out of your day to watch this video. Hopefully you found the information here informative, and maybe it gave you a little bit of insight how understanding market structure and market behavior can kind of enhance anybody's trading style or methodology. If you want to learn more on what we've talked about this video, you can find that in my book, Unlocking Wealth: Secret to Market Timing. It really goes into in depth and illustrates everything we've talked about in this videos. You can get this on our website at tradersnetwork.com. Also, there's a lot of other information on that website. I also offer a free trial subscription to the newsletter Traders Market Views Swing Trading Report. That's available on there. Or if you have any questions or comments on this, give me a call at 800-521-0705. I'd love to hear from you. Okay, once again, I want to thank you for joining me.